welcome to our special webinar. This is Ben Russell. We're going to be hearing straight from David Mitchell today. Beware the bear. Hear from our CEO. This is going to be an exciting one, an opportunity to hear from David. And we live in interesting times, so it'll be a good opportunity for us to get the perspective from a man who's lived through several of these sessions. So when you consider the fact that bear markets happen on a cyclical basis, it's going to be great for us to hear from a man who's been through several of these bear markets. So we're in for a treat today. If I haven't had a chance to meet you yet, welcome. I'm really glad to get to meet you. And you can already see that several of our friends are saying hello in the chat. And I want to make sure you recognize that this is an interactive webinar. You know, I can talk to you, you can hear me. You know, I'm going to have Jenny and Pastor David on the line. We can hear and talk to one another, but you can shout out to everyone in the room just by going to the chat button. I'm telling you, it's great. This is the way the technology works. Go find that chat box. It's at the bottom of your screen. You make sure it says everyone, and then everybody can talk all at one time, and it doesn't get all that confusing. It's not like the voices are, I love the way the technology enables it, so take advantage of it. The other thing, we do have some people online that can help you with questions. So if you've got questions that come up, go to that Q&A box and you can type in those questions there, and we will either type you back an answer or we'll answer it live on this webinar. All right, so I see friends from all over the place. You're already saying hello. So I see Ohio, Chicago, Minnesota, Texas, Oregon, Florida, Massachusetts. Oh, awesome. All right, so we've got friends from all over the place, from coast to coast. And usually we even have a few from international. So it's not uncommon for us to have a few people from Guam. And it's fun just to recognize how much TRADEway has grown and the reach that we have to people that share a mindset of what it means to be involved with kingdom-based initiatives continues to grow. So if you're one of those people that has a kingdom mindset, you're in the right place. We're going to get to hear straight from David on some of the things that he has to share with us for these interesting times. All right, so I love to talk with people about some of the things that we do, because what we do is we leverage technology. We leverage a lot of technology. So we leverage trading sense, we leverage market sense, we leverage technology to be able to do things a little differently. So at TRADEway, we love to just highlight our tagline is that we want to partner with you to make long-term investing biblically sound. Come on, the Bible has so much to say about it. Why wouldn't we use the Bible as our template? So we do, right? We're biblically sound. We want to create a level of safety in these things that we're doing. All right, so you're going to see that in our presentation today, and we want to make it click button simple for you. All right, so with that said, you're going to be hearing straight from David Mitchell, our CEO and founder of TRADEway, a pretty amazing entrepreneur. If you haven't yet heard about David, he didn't start out as Pastor David. He started out as an oil man. And what David's background is that he was being an entrepreneur, learning how the business world works, a fifth generation entrepreneur from a very let's just say scrappy family, you know, a family that's used to figuring out how to make things work and to do things in a different way than what maybe the neighbors are doing. And David's learned those skills from his parents, from his grandparents, and these things have just been passed down from generation to generation. So a lot of what we do at TRADEway comes from this generational knowledge that Pastor David shares with us that we now apply into the market, whether it's trading or investing. So I'm looking forward to introducing you to David so you can hear straight from him some of the things that we do inside the program. And as our founder, we don't get to hear from him very often. So this is going to be quite a treat for you. I'm Ben. I'm one of the investment advisors who helps with being able to determine the investments. I meet with a lot of clients to help you with your questions when it comes time for us to have conversations about how we would advise you to invest. And you'll also see Jenny Taylor. Jenny Taylor's on with us today. And Jenny and I, we partner up quite a bit. And Jenny and I are those IAR type persons. IAR is investment advisor representative. So as an IAR, we are actually able to help answer a lot of the questions that you have. And as an advisor, we can actually talk through your specific situations and help create a plan for you. And to help you specifically to try to preserve those long-term assets. That's some of the roles that Jenny and I play at TRADEway. Okay, well, now that we've got the mic checks done and everything is working, let's get into this because we're going to blend a few things in together. So you're going to be hearing straight from David, you know, how to beware of the bear. But before we do that, I want to give you some introduction to a few ways of thinking at TRADEway. So we have a program that we call AMPT, AMPT, and that stands for Assisted Managed Portfolios by TRADEway. Now, I kind of laughingly say, yes, we worked really hard at the acronym, but we're excited, we're amped up about some of the things that we get to do with and for you as our friends in the TRADEway family. So Assisted Managed Portfolios by TRADEway is how we do long-term investing. And it's perhaps the only biblical-based long-term investing program of its type. And for us, you'll learn more as we get into this webinar, but this bottom statement, it's our philosophy. It's designed for safety. When it comes to our long-term funds, we want to protect them. And this entire webinar is going to show you why protection is such a huge part of our investment philosophy. And as David is going to chime in, you'll see here in a few minutes that beware the bear has some really long-term implications. So for us, it's designed for helping you to preserve and safely have those assets in the market when it makes sense. And we're leveraging the authority of Scripture to design our investment philosophy. That's what the AMPT program is all about. That's what you're going to be hearing about today as well. And the reason why we did it, if you haven't been with TRADEway for any length of time, well, we didn't start out as investment advisors. We started out as traders. So we would be going to these seminars, Pastor David, Jenny, myself, we would do seminars coast to coast. And we'd walk into a room, we start teaching people a different way to think about the market. And invariably, this happens a lot. Somebody on a break walks up kind of sheepishly, hands us a statement and says, I'm working with an investment advisor and I've lost quite a bit of money. What can I do now? Unfortunately, the answer is now there's not a lot you can do. You lost half the money. And now you're kind of in a bad spot because beforehand, you might have been able to take some action. But headlines like what we're seeing here happen a lot. U.S. public pensions lose $1 trillion from the market crash. All right, so in 2020, the COVID crash, public pensions, people's retirement accounts, for the government, over $1 trillion lost. They weren't the only ones. The big boys, the investment elite of the world, those with lots of zeros behind their name, they had a few less zeros after 2020. The world's richest lost $1 trillion in their market capitalization. Friends, when these bear markets hit, they can be drastic, they can be strong, and they can be extremely impacting. So as a trader, I'm like, why do it that way? Well, so before we were able to get all of these things in line with our long-term investing program, we did have to do some regulatory approvals. So at our stock market seminars, when you start asking me questions about your retirement, I wasn't able to really help you with those conversations. I could have general conversations, but I wasn't a registered investment advisor. Well, TRADEway is now. We have registered investment advisors on staff at TRADEway that can actually help you with your long-term investing, have conversations with you, and develop a strategy with you now. So now our hope, our goal, is to not let you be one of those individuals where half your retirement account evaporates in a bear market. And here's why. I love this slide, friends. If you haven't seen this slide before, this is worth your time. Let me explain it a little bit because there's a lot of data here. But these are the bear markets in history. Now, going back to the 50s, right? It's not all the bear markets, but let's just go back to the 50s. So we're looking, 70-ish years of time. Over the last 70 years, we've had several bear markets. Okay, so from a lifetime perspective, these are the bear markets that if you're in your 70s, you've experienced these bear markets. Let's take a look at how they've impacted you. All right, so I'm just going to point at a number here. So let's go to the 70s, right? There's some speculation we might be going back into the 70s based on where we are economically and how inflation continues to rise just like it did in the 70s. So I'm going to point at the 70s as just a potential number for us to start to learn from. All right, so in the 70s, the bear market lasted 21 months. I mean, at what point did you start to figure out maybe you might want to do something different? So not quite 2 years, the market went down. As a trader, I'm thinking that doesn't make any sense. Why would you buy and hold through 21 months of downward negative equity pressure. It makes no sense to me. But at the end of 21 months, your portfolio would have declined 48% if you were a buy and holder. Again, these are index-based numbers. Your portfolio may be a little higher, might be a little lower, but the index, the S&P, went down 48% in the bear market of 73. Wow. Okay. Well, the buy and holders are like, it always comes back, Ben. Just buy and hold. You're right. How long did it take to come back? 69 months. All right, so 21 months of decline and then 69 months just to get back to even. You're looking at 90 months of your life just to get back to where you were. There's got to be a better way, friends. So let's go look at 2007. I mean, 2007 was a 56% decline. All right, so the financial crisis, 17 months of decline. It took 49 months to get back to even after that 56-month decline. All right, so what's the message I'm trying to tell you here? Bear markets happen. They happen on a cyclical basis. They happen in such a way as that we actually can kind of see that they're coming, and we can get some technical indicators that tell us we might want to do something different. We don't want to have to be those buy and holders that it takes 69 months to recover or 56 months to recover. We think there's a better way. All right, so how different might your portfolio look if you didn't have to go through these significant declines is really the core message of what we're trying to get you to understand within the TRADEway investing philosophy. And here's the reason why. Take a look at this chart. What your investment advisors don't tell you. When you go through these drawdowns, how long does it take for you to get your money back? All right, so we were looking at 69 months and 56 months, but take a look. Let's just use this number. See that? Let's round it to 50. We're going to round it down to 50. If you had a 50% decline in your portfolio, you had to make 100% on your new lower cost basis just to get back to even. Wow. So 100% appreciation in the market just got me back to even. What if you didn't take the 50% hit and then you had more of your capital ready to go for the next bull market cycle where your neighbor's using that 100% just to get back to even? How different might your portfolio look if you preserve your capital through the bear and then you're ready for that 100% increase? Your portfolio might be a little different over the long haul. That's the story that we're trying to get you to see with AMPed. So I'll tell you more about this. Pastor David will be digging into this more as well, but I want you to know just right up front, as a part of this webinar, we're going to be giving you an opportunity to learn more. We have two specific programs to help you with your long-term investing. We have AMPed AIM, and AIM is Advanced Investment Management. It's all about us doing the work for you. That's actually kind of new. We have only been pressing the buttons for our clients since last September. Now, so we're a little over a year in us pressing the buttons. Before that, it was always the AMPed Pro. Now, the pros are the people that are pressing the buttons themselves. So whether you want to be a DIY, a do-it-yourselfer, that's the pro program, or we do it all for you, the AMPed AIM program, we have those available. We have those available. So I just want you to recognize that this webinar is designed to help you to understand why a bear market is something you want to defend against and how we as TRADEway can help you with it. So as Pastor David starts to give you some of his wisdom as well about this bear market, keep in mind you don't have to do it alone. You can get our team's help with this very vital part of your long-term asset preservation strategy. So whichever one you want for you, we'll give you an opportunity at the end of this webinar to meet directly with someone like myself or Jenny or David Verbugen to learn more about these programs if that's something that you would like to do. Okay, so I want to get ready here. I'm at the point where I'm just going to give you a little bit more information as to what we do and how we do what we do and why. But recognize that everything we do at TRADEway isn't just about consuming a service. I mean, David's heart and what he's built into our company. We want you to understand this. I mean, we don't want this to just be a black box for you. You know, other investment advisors, maybe that's what they do. Not us. I mean, for us, the other part of AMPed is we want you to get the understanding. What we teach you and how we go about investing is not common in the investment world. We really want to expose it to you. It's interesting. Our philosophy is very different. We want you to learn about how we do what we do and why we do what we do. We want you to learn about diversification and how diversification can be done in what we call the appropriate way. It's all based on scripture, by the way. We want to give you that safety and that control. When you're invested in most of the programs that you all are invested in, if you wanted to go to cash, most of you don't even know how. And if you wanted to go to cash and you tell your investment advisor you want to, often that investment advisor can't do it. So we're trying to give you access to programs that give you safety and much greater control and the potential for higher ROIs. And then the other part of this, step number 3, the core benefit you get in the AMP program is you get our help. People like me, Jenny, our staff in the background that helps you with things like account issues and how do I take a withdrawal and how do I get my tax documents? All of those things our team is here to help you with all along the way. Okay, so our investment advisory representatives, as well as our support staff, we're here to help. All right, so I often look at this one. This one's interesting, right? So, there's headlines through history. I mean, if you've lived for any period of time, you can probably go back and, you can just remember these really big, scary headlines. And I think the one I remember the most, the one that's freshest on my mind, this is the COVID crash. I mean, 2020, it's still fresh. It's embedded in my brain. The COVID crash was the biggest decline in the market I've ever seen in one day, ever. How do you defend days like that? I mean, have you thought about it? For those of you who went through it and you took the decline, have you thought about maybe I could have done something a little different? Well, you could have, if you had the skills, if you had the knowledge. So I want to ask the question. Jenny, if you wouldn't mind, can you pull up a poll for me? I'd love to hear from our friends. This is audience participation time. Everybody, I've been talking for a while. I want to hear from you. Jenny, if you can launch the poll for me, I'd love to know. Have you ever asked your investment advisor to go to cash? It's your money. Your investment advisor is technically, they work for you, not the other way around. They give advice. Not like they tell you what to do. They're giving you advice and then you make the choice. Most investment advisors don't work that way, but that's how it should work. Have you ever asked them to go to cash? All right, so I see a lot of you have participated, but not as many as what I want. Please just spend a moment, if you would, click on the button for me. I want to hear from you. Look at the options. I asked my advisor to go to cash, and the first answer is my advisor talked me out of it. It happens a lot. Your advisor doesn't want to take you to cash because then they're going to have to work harder. Think about it. If they take you to cash, they're going to have to start thinking about when do they put you back into the market. They don't want to have to make that call. The next one happens an awful lot. It happens a lot, right? So the second answer is my advisor took me to cash without argument. The reason why that happens a lot is because most of you are involved in the TRADEway system. So you know that you're the boss, right? But not as many people on this webinar selected that as what I expected. It's right at 10% of you have said that you were able to go to cash. Next one, they argued, and I made them do it anyway. Again, TRADEway students, so there's about 10% of you that answered that one. Oh, 40% of you didn't even know that you could ask your advisor to go to cash. That's the reason why we do what we do. Almost half of you in this webinar didn't even know you could do that. That's a travesty. We want to change that. We really do want you to understand it's your money and you can direct your advisor. Now, this bottom one hurts my heart. About a third of you in this webinar have never had access to a financial advisor. A third of you. A third of you don't have enough zeros behind your name for a traditional financial advisor to want to take you on as a client. Can TRADEway do something different? I mean, can we make it to where more people have access to individuals to help them along the way? Can we give you access to a financial advisor so that when you got a tough question and you're looking for someone to strategize with you, you can make a phone call? That's what AMP is all about. All right, so a majority of you answered that poll, and I just want to say thank you. Thank you for engaging with us. It helps me to know where you are. And I want you just to recognize it is your money, and you get to make choices about how that's done. And we're strongly advocating you should not be a buy and holder. And we're going to tell you more about why. Okay, thanks for answering the poll there. Okay, so let's keep going. We're going to hear from David here in just a minute, but I want to set something up for you. Brian, after hearing that I could go to cash was an option, I asked my my accountant for it. And how do I keep my 401k from going into free fall? You know, it's interesting. You go to a TRADEway seminar, you actually start to learn. You actually start to learn some of these things that the investment world doesn't teach. So good job there, sir. I'm glad to hear that you were able to take advantage of that knowledge and that skill set from being at a TRADEway seminar. It's good to hear. Thank you, Brian. I appreciate you sharing that. Kip, I've never used a financial advisor since they left me in Apple all the way to the crash in 2012. You know, Daniel, it's smart. When you have an advisor that buy and holds, and you've been to a TRADEway seminar, you know there's a better way. What if you could have an advisor that thought like a TRADEway trader? Well, that's what you can get if you engage in the AMP program. All right, so let's keep continuing here. I really want to I want to help you understand a little bit about how we do what we do. Here on the screen, this is a stock chart. And this stock chart represents every single one of these little green boxes that you see represents 1 month of pricing action on the S&P 500. Now, what's difficult to see because of the scale, I mean, this is going back to 92. So you're looking at multiple decades of stock price information. And what we've done is we're just highlighting the areas where when you see those really big moves down over month after month after month, there's some technical things that we can see as traders that tells us we don't want to be in this market. And it doesn't take us very long to figure out that we should start approaching this market and not be in equities that are losing value. So these happen over time. Is there another way, maybe? Well, we're using these trading skills. We're looking at this market. I mean, here's another representation. That's a signature pattern that we look for, by the way. That really, oh, you're not seeing my screen? Are you all seeing, Ginny or Pepper, are you all seeing my screen correctly?
I still see your screen.
Okay, good. I was afraid there for just a minute. I'm like, what? You know, the power of a live webinar, right? You never know when you have a technical issue. So it might be minimized down in your taskbar. Yeah, try changing your view would be another question, another great thing to try there, Brian. Thank you. I just had a mini heart palpitation, so I'm glad you guys are seeing me correctly. Let's continue back on this chart. Now, this is a chart where the candlesticks are weekly. So each one of these lines represents a week worth of movement on the S&P 500. We're starting to see that there's patterns that we can, as traders, look at on different time frames. And it allows us to start to make some decisions where we don't have to be buy and holders. And this is just what we do. All right, so I'm looking at these areas. I'm looking at these declines. I'm looking at what's going on in the market. And let's go to this. There we go. Those are the next arrows. So as we draw trends, as we see these various pieces of this technical puzzle on the weekly chart, we can actually see that there's some fairly interesting information that gives us some predictability that we can start to make some decisions around. All right, so what about this? Does this circle, this really strong move up, look like anything that maybe you've seen on this chart previously? Like right back in here. Right back in here, you can actually see the same sort of pattern. Okay, so we actually proactively told people, this is a really good time for us to get defensive. The market's extended. It's having what we call exhaustion moves. Well above support, well above, this is about the time when there's a nice little correction in the making. All right. And what ended up happening, because we're technologists that are looking at charts, we're doing technical trading, technical investing, we were actually defensive for what ended up being the COVID crash. We broke key support levels. Would you have liked to have been working with an investment advisor who said, you know what, it's a great time to go to cash. It's a great time for you to get defensive and avoid that 32.8% decline? Amped investment clients, avoided a majority of this fall. And in fact, they were even in inverse positions on the way down. Mark, can you guarantee in the AMP program we don't lose any money or break even with the principal amount for a year down? No, there are no guarantees when you go into the investment world. The only guarantee you could ever get in what you're describing would be something known as an annuity. We do not advocate that you go into an annuity. Annuities are quote unquote guaranteed. They're a locked in rate, and it's typically not a good deal for you, but the safety of it is what a lot of people crave. We'd suggest that there's a better way. Instead of putting your money in an annuity, why not be in a program that helps you to go into cash and an opportunity to preserve your capital and be prepared for those next bullish cycles that always seem to come right after those big declines? Is there a guarantee? No. What I can tell you is we do not ride bears to the bottom. When we start to understand we need to get defensive, we do. We go to cash, or we even go to an inverse. That much I can tell you is our philosophy. There are no guarantees in the investing world. And in fact, when you have an investment advisory conversation with one of us, that's actually one of the things that we disclose to you very clearly as you join the program. As much as what we want to help you, this is the stock market. There are no guarantees, period, in any kind of stock market-based investment. It doesn't work that way. Do you have a guarantee in your 401k program? No. Do you have a guarantee in a mutual fund? No. No one makes guarantees because they can't, including us. Great question. Thank you for that. All right, so how do we do it? Well, here is an exact representation of something historically that we did. Amped market alerts. So we predicted 17 days before it happened that the market was ready to roll over. So while we can't tell the future, all we're doing is we're using charts to figure out what the charts tells us might be coming, and we make decisions more based on trading than investing. So we're blending long-term investing with short-term trading and those philosophies together to kind of have more of a medium-term approach. All right. So while we can't tell the future, probability math, what God created, this economy, this world, everything came from him, and he built these things into it. So we can have a greater opportunity of not just being those buy and holders. We can do things a little different. We can use God's wisdom to be able to position ourselves to be more defensive. All right, so I often ask here, if you're a trader, you're looking at this really great trend. I mean, it's hot. I mean, this market's bouncing them off that 10-day. That is awesome. That's a 10-day bounce there, friends. Is that just going to keep going? Type into the chat window for me. I mean, you're sitting here looking at this chart. Is that like, I kind of like this. I want a piece of that. I want to get trading in this environment. Give me some feedback. What do you think? Show of hands. How many of you are like, yeah, that's great. I want to keep going up. Well, I'm going to give you a little bit of a hint. Technicals looks pretty good, but we don't just look at technicals. We don't just look at technicals. These candlesticks create patterns, but are there other things that we can do to help us to maybe get a clue for what the future holds? If you've been at TRADEway, you know we've got a three-legged trading table. The three legs, technicals, fundamentals, and anybody fill in the blank for me? Technicals, fundamentals, and what else? What else do we look at TRADEway? Market tone. Market tone. Okay, so I'm not just looking at the chart, I'm looking at news. And on Monday, June 14th, we actually recommended going to cash on that candlestick, not for technical reasons. We wanted to get cautious for news-based reasons. Take a look at this. The Fed was doing some things in the economy, and we knew that it was coming and the market was likely going to have a correction. How deep, we didn't know, but we wanted to get defensive for it. So we did. We got defensive and we got a 20-day bounce. Not a bad entry signal. The problem that we were looking at, that news item, and especially the time frame in which we really hadn't had a serious correction, told us it was time to get defensive. All right. When's the last time your investment advisor told you it was time to get defensive? Oh, Neil, trying to understand, what does it mean going to cash? So Neil, that's a great question. It's not always a clear answer. But let me see if I can kind of like pull back the curtain a second. When you sell a stock position, that's what we're talking about. We're talking about closing out the positions that only make money as the market moves up. So if you're in a mutual fund, an ETF, a stock position, you can sell that. And now that money is quote unquote cash inside your account. So if you start an IRA, and we're helping you with an IRA in the AMPed program, you can sell those positions and have it sitting as cash funds. And here's the thing that's also fun. The funds that are sitting in your IRA, if they're in our program, our broker actually pays you interest on that. So you can have quote unquote cash sitting in your account, and then you also get paid interest on the cash in your account. So what I mean by going to cash is not holding equities. Being in a position where you allow the market to go do its craziness, have its huge declines, and your money's sitting in quote unquote cash, earning a little bit of interest while the market craziness resolves itself. Does that help, Neil? Okay. So here is that market alert. We are recommending going to cash proactively. David feels there's more opportunity for the downside risk. That's a trader's philosophy, right? We've gone up for quite a while. It's time for us to have a move down. And usually those moves down are very sharp, and they're usually based on some news item, right? So we just got defensive. This is an example of an amped alert that if you're an amped client, you get this information from us. We tell you what we're thinking, we tell you why we're thinking it, and we're telling you about the things that we see in this market that we want to be prepared for. All right, so proactively, we're facing some serious unknowns. We want you to be out of the market before Wednesday. And this is the sort of stuff that happens in the AMP program, day in and day out. All right, so Pastor David, this is an interesting slide. You want to talk with our friends a little bit about what ends up happening here as far as with these moves in the market?
Yes, sir. Thank you, Ben. Hey, that was a fantastic job you've done so far to bring us up to date. I want to thank you guys, though, because we've got people from all over the country on here today. Did you notice that?
Mm-hmm.
Yep. I mean, everywhere, just about in the whole country. And that's pretty exciting. We got people from Florida. We got people from Minnesota, Oklahoma, Georgia, Oregon, Oklahoma, again, 2 Oklahomas at least, Texas, Ohio, Colorado, Illinois, Virginia, South Carolina, even Alaska, and
Alaska. Wow.
Even Mahia, Texas. So we got people from everywhere, and we're really happy to have you guys on. Ben, great job, and thank you, Jenny and Pepper there in the back end helping people with questions and so forth. We appreciate that. Ben, let me talk a little bit about some new numbers here. Those are great illustrations we've had. And the point that I think that I saw Ben make is that you can have an out and out market crash and certainly a major correction at least 4 times a year in almost every year of the market. And if you've got a financial advisor that's just leaving your money in all the way down to the bottom, that creates a problem, because they'll always say, just, hang with it, it'll come back. But it doesn't always do that. In the year 2000, when the tech bubble crashed, it took, I don't know, how many years was it, Ben? 15 years for it to come back on the NASDAQ?
69 months.
Yeah, wow. So like if you were 70, that would be a problem. And even if you're not 70, it's a problem, because all during that time, you're making no money with your money. You're just trying to get back, claw your way back to where you were. So now what I want to do is look at where we are right now. Now, this is a little chart that I made of the current bear market that we're in. And you can see all those dates. If you look across to the last column on the right, you can see where it talks about what the volume was doing on the days that the market was moving down And on every one of those except one, the market volume was higher, which means the big boys were jumping out, right? I mean, you learn that in TRADEway classes. And if some of you guys are new and you haven't had those, I'd go out to TRADEway.com and take advantage of the educational material out there. It's amazing. But if you go all the way to the bottom of that thing, that is a 27.54% drop. Now, Ben was talking earlier about the COVID crash. That was only 32%. So that's not many percentage points from being as big as that one. And that can happen, you know, in a week. It could happen in a day. You don't know. So this is another big one. And so let's take a look at some of the details on this. Ben, let me see the next slide.
The next slides are yours. Did you want me to stop sharing my screen so you share your screen? Or
you can probably click through
them. They're blank, sir.
Oh, you want me to do it? Okay.
Yep.
All right. Well, I think we can do it, although I've got a new Mac, so I was kind of thinking you might do it, but let's see. Let me see if I can.
So yeah, this is the slide deck that I got from you. And I tell you what, while you're getting that done, let me explain to our friends one of the things that if you don't mind, let me share my chart while you're getting that up and running, David. I want to show our friends, this is the stock chart, and this is a different view. This is that monthly chart going way back to 1990. All right, so each one of these little candles is a month. And some of what we do technically is we start to look at what are the really big long-term trends. So there is this blue bar here that represents 50 months of average price data. So when you see a break of a 50-month moving average, the bear markets are a lot more steep than just the normal small bear markets. These are the big declines, all right? So here was the 2000 decline. Went on for a long time. My screen is still loading. Are you guys seeing my screen okay out there? Could be your internet too. All right, so the bounce is up. Once you start to break through some of these key moving averages, man, these are some of the things we look at to know when we're going to potentially see a bottom in these bear markets. All right. When we start to see that 50-month coming into play again, look, here's another substantial decline. That's the 2008. So wait a minute, there's some technical indicators that we can help you with. That's what I'm trying to get you to see. Now, I'm going to take that same knowledge. Now let's go look at today's chart. All right, so I'm going to zoom in right here on this part of the chart, which is like current pricing action. Again, each one of these is a month. This is the COVID crash. Look at how these technical indicators can help us. Look at where we are right now. Does anybody see something on this chart that kind of makes you a little nervous? It makes me a little nervous. I mean, we're below that 50-month moving average, which has historically been kind of a support for a smaller bear market.
Yep.
Well, let me give you some numbers here, friends. Take a look. The 50-month moving average right there, that blue line, 36.13. We closed at 35.83 on Friday. We're below it. Now, the month's not done, right? I mean, this candle could be above it by the end of the month, but this puts us on notice that we might be in for some stronger, longer declines. I'm just going to use this tool, and I want to show you a couple things. All right, so this is Thinkorswim, and on Thinkorswim, I can actually do percentage-based drawings that actually show you moves based on percentages. So I'm going to pull out a chart, and I'm going to go from the top of this candle. So that's the high, that's the closing high. Here is that bear market decline. You see at the top there, that box, watch the numbers as they change. The second box, see right up here, there's a box that's going to be like right here on the screen. Watch the box. As you watch the box, here's the bear market decline. That's a 20% decline. We're past that. Where's the 50-month moving average? The 50-month moving average is a 24% decline. We're past that. Where on average do bear markets with recessions go? 34% down? Oh, okay, so that would be a normal recessionary bear market would be going down 34%. How far is that from where we are now? Take a look. Let me show you. From where we are now, that would be another almost 12% decline. From where we are now. Ooh. Okay, well, let's go down to a historical bear of what we saw in the 70s and 2008. all the way down here. That's a 56% decline. That's a big decline. How much further from where we are now could this market go based on history? Here, all the way down to there is another 41% decline from where we are today. Friends, being a buy and holder can be really dangerous to your portfolio.
It's a nice way to put it.
All right, Pastor David, you ready to go?
Yeah, we'll try this out and see. All right, let's see. That should work.
There we go. Gotcha.
All right, let's see if we can share it. How's that?
Other
back.
screen. That's the presenter's view. Or click swap displays at the top of the screen there.
How's that?
Perfect.
All right. Okay. So let's take a look at this now. This is where we are right now. And you can see that the high that we measured this bear from happened on January 4th. And now here's all the little lows or bottoms, we would call it, that this thing is made on its way down to this point right here. All right, so that's where it measures the 27.54% drop. And Ben, how many did you say it could go if it went as far as 2008? Another what? Another 20?
Another 34%.
Another 34%. Wow. So and you say, well, that's bad. We don't want that. Well, what's great about it, when we have the skill sets, there's not any such thing as a bad market. And you have to kind of change your language a little bit, because when you learn how to do puts, which is just step 2, a lot of you've taken step 2, you learn how to do puts, you have potential to make money on the way down. And even if you don't know how to do that, you could buy inverse ETFs on indexes like the S&P and make money on the way down. So that's not a bad market. It's just a different market, right? Now, your neighbor, yeah, he thinks it's a bad market. Almost everybody around you thinks it's terrible. And because they don't have these skill sets, but you do. You can, if you don't, you can certainly get them. So here's where we started with this chart, and this just shows all the different bottoms on that chart going down there. So we've seen that already. So here's what I want to do with you guys with a little bit of time here is I want to show you how the TRADEway system works. And this will include market alerts from, and we also send out amped alerts as well, but the market alert sometimes has more detailed information. So I'm going to use them for today. Sometimes I'll use the amped alerts. But the point is, I want you to notice the different amped staff that write these, and you're going to be amazed at what they say and then what the market does after they say it. So, and the reason this is important is because when we can recognize that the market is about to make another move down, we can let you know to do one of two things. You can go to cash, which means you don't keep losing money like your neighbor is, or you can do an inverse ETF or do puts or whatever on different plays you're doing and make money as the market goes down. So here's a market alert that went out January the 5th, which was one day after that top right there. And you can see a little doji up there if you look really closely. I know that's kind of small, but one day after that, here was a market alert that was written, and you can see there, it starts out and talks about a doji candlestick near resistance. Markets seem to be showing it is time for a rest. In other words, that had been a really big bull market up until this date. And now the AMP staff is telling us, well, this market's about to take a rest. And this happened to be Ben that wrote this one. And I've highlighted the parts. I don't have time to read the whole thing because I got several of these. So I'm just going to highlight parts of it. But you can see here that he's talking about that this doji has happened. The signature doji pattern happened yesterday, which was on the 4th, near resistance lines. And we've seen on the S&P for the last few months that we may have a pullback coming. Well, yeah, that's a good point, right? Isn't it good to know that before the pullback happened? Yesterday on the live trading hour, I talked about how often the doji is an indecision factor. The market is pushing and pulling, and the doji at resistance can often indicate a move down is coming. on the chart, I see doji candlesticks. I also start looking at the news. Anything coming that might be some bad news or spook the market? The answer for today is a resounding yes, in my opinion. So Ben says it's about to move down. So what happened next? Here's where we were when he sent that out on the day that he sent it. And what did it do? It tanked. So you can see that it moved down, I don't know, 10, 12 days after that market alert came out. But with that market alert, you were equipped to go to cash. And the amped alerts were saying similar things that same day. All right, now here's another one. Let's go out to January 14th. And sellers are gaining the momentum again. All right, now this is one that Pete Bright wrote. Just when we think the bulls are about to regain the momentum, the bears rear up and put bulls back in their pens. Based on yesterday's S&P 500 candle, we may be seeing the start of a downtrend, Pete says. What happened next? That's where we were right when he wrote that. Boom, it tanked the next day for, almost 10 days again. All right, now here's one written on March the 30th of 2020. And this one's by Ben Russell. In our team conversations, David mentioned that with Russia saying they're pulling back, it could change things. But he also said, I don't like the steepness of this move up. It looks almost like an exhaustion move. So he agrees that waiting for a pullback makes a lot of sense. Now, if we go back and look at the picture, well, unfortunately, I covered it up, but there is a very steep move up right before that date. Steeper than the S&P had normally been during the bull market. And that's what we meant by an exhaustion move. And Ben says in the second paragraph, with the market moving up so strongly, just be aware that this is about the time that institutions like to take profits and retail traders are still buying, thinking it's a bull market, but the big boys are selling, is what Ben is saying here. Let's watch this play out and get ready, but wait for the better buy points for our trading capital. It may not be immediately, but I'd rather wait for the market to rest instead of trying to jump in right here when everybody else thinks it's about to go up. Well, let's see what happened right after Ben wrote that. Boom, look at that. Now, folks, you can't make this stuff up. I mean, this is all in our archives, and I just pulled them out of the archives. Here's one on April the 1st. The big idea, yesterday's close was very bearish, right? All right. Now, this is one Pete Bright wrote. I'm going to look at the colored in areas for sake of time, but the market-wide, what we see is utilities was the only sector that moved up. And he says, remember, with the S&P and the NASDAQ, when they are largely driven by the tech stocks like Apple, Microsoft, and all these that he mentioned here. And so when the institutions start to dump these stocks, the S&P has a really good chance of dropping. What could be the broader concern? Well, the likelihood of a near-term recession may be on top of the list. Yesterday, the 2-year and the 10-year Treasury yields inverted. What does that mean? This phenomenon is one indicator of a coming recession in the near term. Still, believe it's a prudent warning signal that hard times are coming. What happened right after Pete wrote this? Here's what the chart looked like right when he wrote it. There's what it looked like the day after that, and for another 15 days or so. Isn't that amazing? Okay, here's one on April 12th. Big idea. The markets, small print in it. The markets broke out moving down yesterday with significant selling pressure coming towards the end of the trading day as well. Futures were flat, and they're looking at higher CPI numbers and so forth. Now, Jenny Taylor wrote this one. And it says, with the S&P breaking back down below those exponential moving averages, this created a second top on the chart. And historically, we see a triple top before a major bear market crash, along with some major catalysts. Think about inflation, think about the Fed raising rates and reducing balance sheets on all these companies, et cetera. With more inflation data being released this week, as well as Fed members speaking, it could continue to be a volatile week. Also, with the S&P moving back below its key exponential moving averages, we could see more action to the downside. Now, what happened right after she writes this? She says, markets are in a bit of a precarious spot. Have a blessed day, Jenny. Well, you can only have a blessed day if you have TRADEway skill sets and you know how to make money on the way down. But look what happened. Here's where we were when she wrote that. There's where we were after she wrote that. I can't help, Ben. I'm having a little fun here because I'm proud of you guys.
It is fun, isn't it?
Yeah.
David, what I like about this is that you're not trying to say, well, this is what we think. This is what we told people in advance, and then you're showing the chart after we talk about it, right? This is not an easy thing to do, right? But you're highlighting what we do.
It's not. It took me 40 years to learn to do it, and then you guys compressed time by going through our educational system years ago and developing great trading records, and then being asked to come and be with us as speakers and teachers, and now administrators of AMPed and so forth. And so it's fantastic. I mean, if you add you and Jenny and your years to mine, I don't know, it's another 80 years almost. So that's a lot of experience, but it's pretty cool. Now here's one on May 26th. The big idea: the Fed minutes give some certainty on upcoming policies, and markets reacted positively, closing higher. Futures are positive and climbing higher. Now, Jenny wrote this one, and Jenny Taylor, she's on with us today. Hi, Jenny. Did you know I was going to brag about you? Well, anyway, she says this: it is hard for me to anticipate the market to keep going straight down. A relief rally makes more sense. I wonder, as I said, now remember, now we're in the middle of a bear, and she says, well, I think it's going to go up a little bit. She says, I wonder, as I said previously, if the Fed minutes from yesterday will give enough bulls the gumption to really push the market up a little higher, maybe up into the 41.75 area that I have highlighted blue on the weekly chart that she put, a picture of that in with this market alert. This could open the opportunity for many failures. Now, does that make sense to you guys? Like, she says it's going to go up, and what she's talking about, a pull back up, is a good thing, because then it can hit a major moving average and tank again, and that's where the opportunity is in a bear market. And so she says this could open up the opportunity for many failures and great opportunities for down trades, even if the up move doesn't get that high, even if it's a small little move. She says a significant push higher, several days maybe, will open up so many opportunities for down trades once the market stocks turn back over. Now, here's where we were when she said that. Here's what happened next. And I don't know if you can see that, but it moved up for 1, 2, 3, 4 days. And even though that candlestick just to the left of that is dark, if you realize it opened at the top and went higher, it went all the way up and hit that resistance line. But went up for 1, 2, 3, 4 days right after she wrote that. And what else did she say it would do? Well, she said it would tank after that, and you would have opportunities for put plays. Well, look at it. Don't you think that's pretty cool? Jenny, you nailed that one down to the 4 days, and then the bear market move back down was exactly as you called it. Now, what is this kind of information worth? I mean, how do you put a price on this kind of information? All right, so here's another one. That one's so little, I'm not even sure I can see it, but I think it says April 15th. Yeah, that's what it says. Now, this was after the crash that Jenny predicted, and then we got a pretty big pullback in the market. But we're still feeling we're in a bear market, and this is a correction. And then Pete Bright writes this: perhaps the bulls are thinking a recovery from the bears' takeover the markets is well underway, while those bears may be just waiting for stocks to get a little higher before placing sell orders. Yeah, maybe so. The fact last week's volume was light. Now, notice he's pointing out that on those big up days, the volume was small, which means that's not big boys doing it. Well, when it's not the big boys, that's bearish, not bullish. But your neighbor thought it was bullish, so he's buying stocks right now. Particularly with the release of monthly inflation reports, tells me at least some of the big institutions remain on the sidelines. They're either doing nothing or they're selling. The chart suggests that may also be true for this entire current rally. Nearly all the above normal volume candles in the weekly chart for the year to date are for down weeks. Is this cause for concern over the true nature of this current rally? Perhaps. Now, he continues down there. Someone else may say the economy is much too fragile to jump back into stocks, especially those more vulnerable to recession. Regardless of your sentiment, It may be premature to get all that bullish until we see a strong weekly move up on higher than normal volume. At this point in the summer, we may need to wait. Now that's great information. Wait, just stay in cash, right? Just wait until Labor Day, etc. Well, what happened? And he says, have a blessed day and a great week, Pete. Well, people like Pete make you have more blessed days and more great weeks, because look what happened. Here's where he wrote that. Now, to the average person like your neighbor, that looks like a bull market just started. And it looks like it's gone on for almost 2 months. But what really happened? The market tanked, just like Pete said that it was about to. And that's kind of where we are now. So there's another one I want to show you, though. On April the 13th, after a little pullback there, it says the news remains negative, and the Fed's talking about a 75 point hike in the rates. Could this be why the market is moving up? Well, probably not. And that's an interesting leading question that Jenny Taylor asked, but here's what she says. The market is its own beast. Like, it is moving up, but it doesn't make sense to Jenny Taylor, is what this is saying. And she says the market's moving up, but it's its own beast. It can do whatever it pleases, whenever it pleases. It doesn't care what we think or feel. So obviously she's feeling bearish because the news, and all of us were, but the market went up a little bit. So it doesn't matter what we think or feel or know it should do. In fact, it doesn't have to and won't do what we want it to do. We cannot control it. What we can do is control ourselves and how we interact with the market. So if the market isn't making sense to you, like going up in a bearish news and a bearish market and high inflation and the Fed raising rates, well, then this is a great time to sit on the sidelines, and that means in cash, until you get a better idea of the market trend. If you still have a read on the market, follow your trade plans and be disciplined. Have a great day, Jenny. And so, yeah, it tanked after that. So, you know, that's mainly the stuff that I wanted to show you. It's kind of interesting here, just a day or two after that one, which is right near the end of that chart, which is kind of where we are now, one day shy of where we were on Friday. This one says the big idea, huge moves down could be setting up for a relief rally. Stocks rarely move straight up. And Ben wrote this. It says, everyone is very, very bearish right now. Usually this is about the time the market decides to rally, and the short covering drives stocks up strongly and quickly. Notice the word quickly. If that happens, I'm going to start looking for the next opportunity to buy puts. Now, why would he be buying puts if the market's moving up quickly? Well, because he knows what he's doing. And so he's ready to buy puts while the market's moving up. And it moved up for one day. If you remember at that chart on Thursday, it looked like it was moving way up, but look what happened the next day. It tanked on Friday, right after he wrote that. So that's what I wanted to share with you. Now I've got another thought here before I turn it back over to you, Ben. On Friday, the inflation metrics came in hotter than expected, dashing the bulls' hope that the Fed would be able to slow this thing down. And Ben says the market decided to show who is boss on Friday. And he had predicted it would go up quickly and then head back down, and it did it in 2 days and had the largest drop recorded in quite some time. That's what happens when the market has a negative surprise at the resistance area. So in that one day on Thursday, it moved all the way up and hit resistance. And Ben had said it would probably move up, and it did. But the point is, it moved up so much on Thursday that it hit resistance. And then a surprise happens. The inflation metrics were expected to be a little bit cooler, but instead they heated up. This means the Fed could be forced to raise rates, etc. Read through the articles below that Ben provided. See, we give you the articles that we're reading so you learn how to do market tone yourself. It may take you 3 or 4 or 5 years, but we're here for you until that happens. Eventually you'll get it if you keep watching the markets, go through bulls and bears, and you keep reading the news and see what's real and what's fake. The harsh reality is the Fed must tame inflation. They must tame inflation. And the stock market is likely to be a casualty in the war on inflation. The gorilla's candy is getting pulled away. That means they're not printing cash. He doesn't know what to do, so he's throwing a massive fit. keep in mind the data we've shared before. Bear markets coupled with a recession historically last about 14 months. So now Ben's telling you guys what to do, that when this thing, if it does go down another, I forgot how many he said, 34 more points or 35 more points, what should you do? Well, they seldom last longer than 14 months. And then you get the next first year of the next new bull market, which is the best trading you'll see in a long time. So that's coming. So if you haven't done your education, go out to TRADEway.com and check out all the programs, and then get your practice trading done, and then get your small money trading done, and then you'll be ready. And then if you're inamped, you can let us do it for you, and or you can do it yourself. Ben's going to show you more about that in a minute. So if history is any guide, Ben says we have further to fall. The falls rarely go straight down. The signature moves down, shallow little bitty pullbacks and recoveries and greater declines is what we're looking to see. If we get it, that's a much easier environment to trade. In other words, if it does the little pullback and heads back down, then we know to do down plays, right? All right, so there's the 27.54% drop that we've had right now. So yeah, I want you to think about this, and I'll turn it back over to Ben. What if you look at this 28, let's round it up to 28% drop, and you assume you have one of these every 4 years, which is what we find is, on average. Plus, this is being conservative. So let's say you have one of these every 4 years. And let's talk about your family going out 3 generations and you teaching your children and grandchildren these skill sets and creating a family business of stock trading and investing with your kids and grandkids. So that's 90 years out into the future, right? So let's divide that by 4 of these happening every year. So that's 22.5 bear markets over the 3 generations, including you. 22.5 times a 28%. If you just said they only fall this much, 28%, not the 40 something percent Ben says this thing could go, then that is a minus 630% loss. That's a double negative, so I should have left the minus sign off, but a 630% loss unless you can read market alerts and you're in amped AIM, and we're doing it for you, the guys who wrote the market alerts, and we go to cash during those times, in which case it's a 630% gain over your neighbor. Now think about that. And that's without even making any money in the market. That's just by simply going to cash at the right time. So the preservation of wealth is huge. Yes, we want to make good returns, but the preservation of wealth is huge. And it's certainly the most important thing in a crazy bear market like this one's been since January the 4th. All right, Ben, I'm going to stop that little thing and turn it back over to you.
Excellent. Well, it's fun to be able to recognize just the power of thinking a little different. And, you said that they happen every 4-ish years. I mean, David, do most people that you know have a 4-year perspective when it comes to the market?
Well, they don't. They're being freaked out by news that the big boys float to make you think the opposite's going to happen from what they're doing, so that when they're ready to sell, you buy.
Yeah.
If they're ready to buy, they send out scary news and freak everybody out, so everybody sells and they buy it from you cheap. And so most people, unfortunately, are looking at today and tomorrow and the next week or month. They're not looking at 4 years out. But with our long-term money, our retirement money, we've got to look at 4 to 6, we say 3 to 6 years out. And you might have a couple of years where all you do is preserve wealth, where you might lose 4% of our clients' money while the S&P lost 40%. So really, that's a 38% gain if you look at it right. And then after that, when you get in that next new bull market, who knows what we can do as far as returns. So that's kind of where we are.
It's pretty powerful. And I think, David, it's the one thing that I think we have the hardest time conveying, because we don't have long-term perspectives as humans, right? We're not wired that way. We're the microwave people, right? It's like push the button and get my coffee, right? It's like the Keurigs, right? I don't like Keurigs, but I'm going to use it as an example. If you're like a trader, you're the guy that wants to go press the buttons, or you're the gal, you want the Keurig coffee. For me, I'm more of the, I'm the let it steep kind of guy. I'm going to go spend the 15 minutes it takes to make a really good cup of coffee and enjoy it. What type of person are you? When it comes to investing, we're going to advocate. You want to be that longer term thinker. Don't just get scared out of the market. Don't get so pulled into the bulls as they start to run that you get right in as they're about ready to pivot it back down. And we can help you with that. So it's good stuff, David. We do have a question here. What's a generation? 30 years, 40 years? What do you define a generation?
I've been a preacher for too long, I guess, 40 years. And so I'm using the biblical generation.
Okay.
More like 30 years.
Well, I think that there's probably a good 30 years of people's normal, like really dedicated work life, right? So, 30 years is normally what a good career is. I mean, if you work longer than that, you're blessed. But, 30 years in a career is about normal, right?
Yep.
Oh, so Dawn is with me. She's a grind the beans, get good water, right? So think through that. I mean, some of these things to really be good at it takes some time, right? Just realize that it's not an easy skill set for you to pick up, and it's the reason why we're going to try to help you with that. So good stuff. Anything else you wanted to share, Pastor, before I continue on?
No, sir. I'm anxious to hear what you got to say here on the rest of this program, and just appreciate you guys for letting me have a little bit of your time today. Bless you.
Okay, so let's keep going, because AMP, that program we talked about, that advanced way that we think, the assisted managed portfolios by TRADEway, backed by scripture. That's how we do what we do, right? So we actually look at scripture. So this is straight from David Mitchell. And remember, I told you about his philosophy when we started. He's an entrepreneur. So he didn't start as Pastor David. He started as entrepreneur David. He started as oil man David, got called to preach, and now he's reading scripture and he's like, wow, that's like an economic principle straight from scripture. Most of your pastors don't have that lens, friends, right? So everything that we have within our brain sets becomes a filter with what we see. What's David's filter? What's David's lenses as a businessman? So when he looks at the Bible, he sees economic principles everywhere. So let's look at some of the things that isn't unique to TRADEway, because we're not the only ones that have done this. If you look at all of our Ivy League universities, Harvard, Yale, William and Mary, they all started out as preacher schools. They used scripture to be able to teach people, and it became the basis of some of our most prestigious universities. And we often like to say they're just forgetting to quote their sources now. Let's look at a couple of those sources. Here's Ecclesiastes 11:1 through 6. Cast thy bread upon the waters. Thou shalt find it after many days. Give a portion to 7 and also to 8, for thou knowest not what evil shall be upon the earth. That's diversification. I mean, it's asset diversification straight from scripture, and it even gives you a number. All right, what about the next part? Verse 4, he that observes the wind shall not sow. He that regardeth the clouds shall not reap. This is risk reward. And if you don't invest, there is no return. You don't plant a seed, there is no crop. You put the money in the mattress, there is no growth. All right, for thou knowest not whether this shall prosper, either this or that, or whether they shall both be good alike. That King James English, let's take that apart a little bit. You don't know what areas of the economy are going to get better or worse. I mean, we actually as investment advisors look at that. We have some technical indicators that help us, but there's things that happen that are outside of our knowledge set. We had no idea that Ukraine was going to get invaded by Russia and cause the energy crisis that it did. And so when things happen in the economy, it can be unpredictable. So that's why we want to diversify in what is quote unquote proper, biblical. And we'll talk about that in a little bit. So what does the Bible have to say about how to do this? What is AMPed built upon? Well, you just read it. Divided into 8 major groups. 8 major groups. We just read it in Ecclesiastes. There's 16 subdivisions. So these are areas of the economy that we can identify, and it comes straight from Ezekiel. If you go read Ezekiel 27, you'll actually see things like chariots. You'll see things like pharmaceuticals. You'll see the listing of things that are actually a part of our economy today. And as a part of AMP, we break up across those different subsectors of the economy. So as these things that we read straight from scripture correlate to what we see and know today, might that give us an opportunity to build an investment plan? And sure enough, it does. That's what AMP is all about. So these 8 categories, there's one very special one. And Pastor David alluded to it in his presentation. I just want you to catch it. The 8th category, and that 8th number is all about new beginnings. If you don't have a Hebrew mindset, this might be new to you. But anytime you see a number, it's not just a number, not to the Hebrews. Right? So when you look scripturally at what does the number 8 mean, there's a concept that says the first time something is mentioned in the Bible becomes the definition of that thing. The number 8, the very first time it's mentioned is Noah and his family as 8 souls on the ark. So this new beginning in Hebrew culture is a pretty important concept, because if you're one of those individuals where maybe your financial advisor has kept you in these bear markets for a significant decline, you probably need a new beginning. What do we say that new beginning can be? It can be these trading skill sets that we have at TRADEway, that the 20% money is what we articulate. Remember that from step 1? We're like, keep 80% of your money safe and secure and preserved. That's what we do in AMPed. But if you're the one of those individuals that needs a new beginning, take 20% of your money, start to trade it. Now, granted, go through our system first, right? Don't just take 20% if you're a brand new trader. No, walk through our system, learn how it works, become a trader, and then start to invest that 20% money with your own trading skills. That's what we advocate. So if you need a new beginning, number 8 is a huge part of the TRADEway philosophy. All right. The 8 categories that TRADEway suggests, here they are, right? And your investment advisor, if you become a part of the program, can help you to understand more about what we do. But these are things that you know in our economy: the stock market, emerging markets, real estate, bonds, natural resources, cash. Cash is a position, friends. And we actively leverage that, especially in times like now where things are just not good. And then number 8, those short-term trading skills. That's kind of the TRADEway philosophy all on one page. Now, we couldn't do this without some help. I often tell people, I think 30 years ago, we couldn't have done this. 20 years ago, we might not have been able to do this. Interactive Brokers is our technology partner. So if you actually decide to join the AMP program, our staff helps you with creating your accounts at Interactive Brokers. They're like your bank. They're the place where your money sits, and then we get to trade and invest that money that's in your account because of Interactive Brokers technology. All right, so here's a couple of things that are just sort of a quick picture of a very small snapshot. Well, what if I told you, if you're a pro, hey, go apply your cash squirrel? What do you think Cash Squirrel would do? Well, it sells the positions that you're in and takes it to a cash position. Remember when I asked you, have you ever asked your investment advisor to go to cash? What if with a click of a button, it could be done? That's what the AMP program has access to. All right, so this next one, aggressive bull. Well, this is a blended portfolio across those subsectors of the economy, and we get to go buy into the bullish market with a click of the mouse. Inverse ETF bear. This one's interesting. You ever heard from a financial advisor who's like, hey, let's go buy some inverse positions and try to ride this market down and make some money as the market decreases? We have the capabilities of doing that in our program. Interesting. All right, so if you are a part of the AMPed program, we're going to suggest that any account you want us to help you to manage, where we're pressing the buttons or you're pressing the buttons with our technology, that's going to be at Interactive Brokers. Now, if you're trading, we have other trading partners that we recommend. So Elizabeth, you're asking a great question in chat. If you're trading that 20% money, we recommend Tradier. They integrate perfectly with Charts by TRADEway. But if you're going to go invest that 80% money with us and you're going to want our help doing it, we're going to help you with creating an account at Interactive Brokers. Because what Interactive Brokers gives us is the technology where with just a few clicks of the mouse, I can affect the positions on hundreds and hundreds of your accounts, all in one interface. Tradier, you do the trading. Interactive Brokers, we're helping you to do the trading. Does that make sense? Would we be able to transfer 401k? That's a great question, Elizabeth. Often the answer is yes. Not always, but often. Now, if you've changed jobs, the answer is absolutely yes. But what you would want to do is contact your benefits administrator and Get your pencil ready. Write down this question. How much can I roll over to an IRA? That's all you got to do. Ask that question of your 401k benefits administrator. How much can I roll over to an IRA? Anything you can roll over to an IRA, our team can help you with managing. Okay, great question there, Elizabeth. Thank you. How else do you benefit? Well, those frequent alerts, those alerts that David just told you about a few minutes ago, those come out frequently from us where we're showing you what we see in the market. You're getting the support from our great team, and you have the opportunity of making money on the way up and on the way down. Now, it's actually harder than it sounds to make money on the way down, because anybody watch the market on Thursday? Anybody see the huge move on Thursday that came up? We actually knew that there was going to be a relief rally. Our trading philosophies in the background are a part of what we talk about with you day in and day out as a part of this program. So you want somebody to walk the journey with you? Let us be a part of it. It's a huge benefit for you. When's the last time your financial advisor told you what they saw coming in the market? All right, so how else do you benefit? Our philosophy behind everything that we do. And the big one, you're going to avoid markets like what we're in right now. Avoid being in the market all the way to the bottom. That's devastating to your portfolio. Remember those numbers Pastor David just shared with us. Over 3 generations of your lifetime and your descendants' lifetime, he estimated over a 600% impact to your wealth. That's worth avoiding, friends. When the market is good and the market is doing what we kind of expect it to be doing, let's be properly diversified so when the unexpected happens, we can actually deal with it. And let's take advantage of our short-term trading skills. All right, so I mentioned this earlier. I want to dive in a little bit more. AIM, Advanced Investment Management. It's all about us clicking the buttons for you. Now, friends, I know so many of you out there, you have busy lives. You're like, this investing thing gives me a little bit of heart palpitations. You know, when I think about what's happening in the investing world and the difficulties of it, then me pressing the buttons just sounds like a stressful thing. Can you do it for me? Yeah, we can. We absolutely can. It's called the AIM program. If you want to know more about AIM, I'll give you an opportunity at the end of this call to schedule an appointment to talk with someone like me or Jenny or David, where you get an opportunity to get your questions answered. So here's what our programs cost. We don't do this for free. This is a business. Now, these are very cost advantaged, but there's upfront costs to get you started because it involves some training. And it depends on which of our 2 programs you want to be involved with. Amped Pro. Earlier I mentioned it, the Pro. It's like the do-it-yourselfers. We train you how to use our technology. We train you how to press the buttons. We train you how to do what we do with the technology. And then we send you alerts. Hey, go apply this specific file in your tool sets. If you want to do that, the upfront costs are a little higher because we got to go train you, right? There's more time from our staff to train you on how to do this. And then your fees are going to be lower. Your annual fees will be slightly lower, okay? So higher upfront, lower long-term on Pro. Now, if we do the work for you, it's very low upfront costs, but slightly higher longer-term fees. That's kind of the difference between our 2 programs. Now, normally, I'm being upfront with you. Most of the people that come into our program are much more interested in us doing it. If you want to do the Pro, you need to be accessible when the market is open. You have to be able to get to your computer and actually press the buttons and make the changes to your portfolio at any time that the market is open. And for most people, that's not conducive to their lifestyle or their job. Which one works for you? Talk with your investment advisor. Let's figure that out for you and your family. Oh, can I start with AIM and change to Pro later? Yeah, you can do that. There will be a cost to do that conversion because a big part of the difference between the programs, we got to go train you how to do this. So that training is the big part of that upfront cost that's higher. All right. Now that 8th category, this one's pretty jazzing, right? I mean, if we want to talk about being amped up, let's talk about what amped up could really mean. Well, we worked really hard on this acronym too. So Amped Ultra Portfolio is amped up, and it's all about that 8th category. Remember that trading, you can go do your own trading. Well, what if TRADEway, our investment advisors, could help you with that? What if you could start an account at Interactive Brokers and now our traders can get in and out of specific individual stocks and not just a blended portfolio and try to help you with that 20% money? Well, that's what the UP program is all about. And if you want to know more, schedule a meeting with one of our advisors. Let's talk about the program. The minimum on the UP account is $10,000, but we suggest $25,000 or more. And we have some very specific requirements about UP. Friends, this is the most aggressive thing that we do. And because it's the most aggressive that we do, we actually enforce some rule sets as a fiduciary with you. We don't want more than 20% of your net worth, your assets, in the ultra portfolio because of the risk tolerance. So you can work with your financial advisor to talk more about that, but let's just put some numbers out there. If you have $100,000 net worth, I don't want you putting more than $20,000 in the ultra portfolio. We'll work with you on that, but recognize this is the most aggressive thing that we do. And we just want to limit how much you have in our most aggressive program. Couple questions I see there. When and how do you schedule an appointment? That's coming up in just a moment. I am actually nearing the end where I'm going to ask you, like right now, and poll number 2. Jenny, can you pull up poll number 2? Poll number 2 is, I'm going to ask you if you want to meet. Do you want someone like me and Jenny and David that can partner with you to help you with this long-term investing? All you need to do is click on the buttons that you see on the screen. This poll is how you let us know you want to talk with one of us. How much are you looking to invest? And the reason why we ask is because then we're going to come prepared to the meeting that you're going to schedule with numbers for you to understand what your fees are going to be. The next steps in this process is after you've clicked on these polls, that's your way of telling us, I want to meet with you. I'm going to send you a scheduling link that says, hey, I'd love to meet with you. When can we meet? Look at my calendar through this link. Look at your calendar. Pick a time that works for you, and let's do a Zoom meeting session so we can one-on-one answer your questions. Like in this chat window, someone's asked, hey, can you do a traditional IRA? The answer is yes, but I can help you with those specific. Can I move my 401k? Maybe. I'll help talk you through that. Can you do a trust account? Yep. Can we do an inherited IRA? Yep. Can you do a Roth account? Yep. Can you just do a liquid savings account? I've got a rainy day fund. Can you guys help me with that? The answer is yes. You want to know more? Talk with one of our advisors. We'd be happy to help you through. So find those buttons on the screen. Let us know how much you're thinking about investing. This is not a commitment. It just helps us to be prepared. And then if you scroll down, let us also know which one of our programs you're most interested in knowing about. The Amped Pro. Remember, Pro is you press the buttons. AIM, we press the buttons, and that's your long-term portfolios. The Ultra portfolio, that's that shorter term, more aggressive Ultra portfolio. Just kind of let us know what you're thinking so that we can be prepared for the meeting. So what happens after this? Well, you got an opportunity to think and pray about this with your family, figure out what makes the most sense for you, but we would highly suggest to get help from people that think like traders. Most investment advisors are going to be buy and holders. Most. It's what's easy for them. But what's easy for them is not necessarily what's best for you. If you would like to have the help of financial advisors that are not afraid to make the hard calls, and trust me, we don't always get it right. We don't. We're not trying to catch the absolute bottoms. We're not trying to catch the absolute tops. We're just trying to catch that middle part, which is the best part of the market. Man, and if you're looking for somebody who can help you with trying to make decisions in that vein and be more conservative when the market doesn't make sense, please consider us. You saw those slides that I showed you with the market. We're at a pretty critical junction. We could bounce from here. I mean, the market with that 50-month moving average technically says it could bounce from here. Are you prepared for that? Now, I also showed you, we look at news. And I also showed you that we are nowhere near what a historical bottom would be for a bad bear market. I don't think we're done going down. If I look at the news, if I look at what the Fed is doing, they have not yet pivoted. They are going to continue to raise interest rates until inflation comes under control. And inflation's almost 9%. Interest rates are under 4. Historically, interest rates keep rising until inflation drops below the interest rate. We got a long way to go, friends. Would you let us help you? Click on the button, let's schedule a call, and let's see if we can help to preserve your assets. It can make a huge difference to you and the generations to come after you. If you want our help, that's what we're here for. All right. If we are part of the Master Trader program, do we need the amped education part? Yeah, Billy, you do. So included for free is your consultation and your ability to get started with the program, but amped itself is not included in your Master Trader benefits. Great question. Okay, Jenny or others out there, are there any other questions that we need to cover? Jenny, you can go ahead and close down that poll if you would. Okay. Let's see here. Can I move my TSP, my Thrift Savings Program? It would be a rollover. So TSP is a government-based retirement account, and we have helped individuals with TSPs, but only once they've retired. So you can roll over your TSP once you have left the service of the government. Great question. Is there an account minimum for AIM? We would suggest 25,000 is your minimum. If 25,000 is not something that you're able to do, we do have some alternatives, but they would not be the AIM program. Yeah, so Billy, if you're retired, your TSP can be rolled over. Can we roll a Roth IRA into the program? You absolutely can. In that case, it's not technically a rollover. A Roth would just be a transfer. So you would transfer the Roth from one provider to Interactive Brokers. And part of what happens when you join the program, you got a team of people to help you to do that. If you've ever started one of these accounts, you know it's not simplistic. They ask you a lot of questions. What if you could have one of my staff on a Zoom call with you, walking you through doing it and showing you what to click in the buttons and helping you with your transfers? That's part of what you get with our service. So when you sign up, some of those costs that you're paying is because we're going to have someone help you with this. Elizabeth, if you want an appointment, all you have to do is have clicked on one of those buttons, we'll send you back an email. And if you did not get an opportunity to press the buttons, you can see down there at the screen, this is how you can actually schedule an appointment with us directly. Go to tradeway.com/AMPT, and our staff will know that you want to talk with us as well. tradeway.com/AMPT. Okay. Well, my friends, that pretty much brings us to the end of the questions that I can see there. So I guess the last thing to do, Pastor, I think it's time for us to say thank you. So I'm going to say thank you to you, first of all, because it's great to hear from you and to allow our friends to hear your perspective. You've been through several of these bear markets. Your history is invaluable. So thanks for sharing it with us today.
Thank you, sir. It was my pleasure to be here. And I want to thank all of you for being with us too. You had some great questions, and just pray about this and think about it. And we're ready when you are.
Okay. Well, everyone, thank you. And if you've got any further questions that didn't get addressed, you can either schedule that appointment with the advisor, be watching your email. If you clicked on the button, you will be getting an email from us asking for you to set up an appointment time. It's important for you to be watching for that email. Sometimes it goes to your spam or your junk. Please be looking for it. But once you've scheduled your appointment, one of us is going to help answer your questions and then give you some opportunities to make a choice about whether or not this is good for you and your family. This isn't a high-pressure sales call. It's a consultation. You get to make the choice. That sounds good to you? We look forward to talking with you. Thanks for being here today. Have a great one. I hope you have a great weekend. Thank you, Pastor David. We'll see you soon.
Bye-bye.